We know that Friday was closed because of the promulgation of that new constitution in Kenya, but we're beginning the day with the market down. Waiyaki Hinga from Waiyaki Associates. Does that make sense for you, given the euphoria around the promulgation of the new constitution and the expected impact that this will have on sentiment going forward?
Well, I must say we have also looked at it with a bit of skepticism, but we have to understand that even as the market opened, Mondays is traditionally the market never opens on a very high note. And we still are on the holiday season, this being the last 2 days before now schools reopen from the 2nd of September going on to next week. But also we have to notice that there was a lot of profit taking that had been taking place for the last 2 to 3 weeks.
So we do know that investors were likely to take profits, and one big story though that we've had in the past week has been the price wars between Safaricom and the other mobile phone companies. Now we're seeing today Safaricom coming under pressure. Do you expect that Safaricom likely will continue to be hit as investors flee, and will also as investors take the view that perhaps profitability going forward is going to be affected?
Well, what we have to look at it with regards to the price war is sustainability. How long will this price war be sustained? Because you also have to look at it from the point of view of Safaricom's almost 15 million subscribers to Zain trying to bridge that gap. It will not be a gap that will be bridged overnight. Yes, there's a price in terms of it's cheaper to call on one network, but the ability to bring in the numbers will not happen overnight, and which still gives Safaricom an added advantage. And then twofold, you find the fact that data is still part of their package. They still have data that has been also ongoing. They've been very strong on that. So by the time the competitors are actually really competing with Safaricom, it may not happen overnight. But then again, we also have to look at it from the point of view of investors. Most domestic investors are looking at it from a point of view of that, let us jump bail now. If you look at like today, we've had about 8.8 million shares trading at between 4 shillings and 80 and 4 shillings and 90, showing that either way, there's still a lot of people who are voting with their feet, looking at saying that Safaricom may not be a viable company going forward, because Bharti Airtel is going to be a worthy competitor, not as the previous Zain was.
Indeed. So on a valuation basis then, do you see value in Safaricom now?
Well, we still give it a positive valuation, because going by its strength, like I said, it's taken a couple of years to be where it is as a market leader. There have been regulation that was trying to be passed in terms of trying to deal with Safaricom's dominant status. There's been now the issue of this price wars. But the key thing is, when we are to remove all this happenings on the side and to really evaluate Safaricom as a company, we notice that it has very key strengths. Its M-Pesa is still very strong in terms of its network. Product services in terms of linking, there's a M-Kesho, which links in terms of M-Pesa and banking facilities with equity. Then you have again its subscriber base, which despite it having these shakes of price, they still have much more subscribers on their part. And there's the data. The data has been very effective for them. There's a Safaricom that they are checking in with. There's a partnership with the Teacher Service Commission, where teachers now on board are actually being brought in and getting computers or laptops at a much cheaper rate. So going forward, we'd look at it that it still is a viable company in the long run. Right now, in the short run, it may look like they're really taking a beating from it, but they're not taking a beating lying down. So we'd still give it a positive valuation with a strong emphasis on their data part as opposed to their voice.
Definitely, that sector is one that we're going to be watching for a while now. Let's move on now to the financial sector. Today, that sector in the market was the most heavily traded, with 37% of the shares that moved there. Equity Bank, particularly attracting attention. Is there any specific reason why almost 3 million shares moved in that stock today?
Well, you notice Equity Bank over the time, there's been the value pricing. You notice a lot of, whenever the price moves up, whether it's by 1 or by 2, 3 shillings, there's still an element of profit taking. But also going forward, you notice that there's been very much renewed interest both by foreign as well as domestic investors for the Equity Bank shares. And as you go forward, you notice that their model is proving to be even more profitable as they go on. There were those naysayers who had really predicted them coming down in terms of their expansion. But when you look at their management structure, and their model. They've been very effective in terms of evolving with the current status, moving forward. Now, right now, we notice that their branch expansion, especially within East Africa, has started proving dividends. Uganda has been coming up. We have the side in Sudan that is coming up, but also in terms of their management levels, that it is still a profitable company and one that one would be more or less easily able to attain at the market, because at 23, 24 shillings per share, it means that you'd still be able to afford it, whether you're an institutional investor or whether you're an individual investor.
Indeed. Now, last week we saw global markets coming under pressure. Now we're seeing some kind of rebound today. Have you been seeing any increased activity out of foreign investors into the Kenyan market?
Well, I had to say between today, we've not had much of that, because today being Monday, there's not been that much of an interest. But going by in the course of the week, Tuesday, Wednesday, we should be able to get positive numbers and have a comparison, because the only comparison we have is the market as of Thursday, because as you're well aware, Friday was not a day of trading. So given by that, I would say there's been renewed interest from the longest time. Ever since there was a passing of the constitution throughout the referendum, we saw a lot of renewed interest by foreign investors. And then also by the prediction about Kenya's economy growing in a positive direction, 3 to 4% again. And then there's a large infrastructure developments. We've had infrastructure bonds that have been floated, which one was actually oversubscribed by almost more than 18 to 20%. So there's a very big renewed interest for Kenya in general. But with regards to the Nairobi Stock Exchange, yes, there's still that positive interest we've been seeing. And given by the way the week has been going on, I know today the market started on a low note, having dropped a few, almost 33 points. But going forward, there is a lot of positive aspect towards it.
Indeed. Let me then put your head on the block. So going forward for the third quarter, what are you seeing in terms of the performance of the market? What percent do you see us being able to add to what we've seen so far this year?
I do see us hitting the 5,000 mark, which has been a mark that more or less signifies a lot of positiveness. I see a lot of trade, especially with the financial sector. We've seen the agricultural sector in the first quarter was very positive by all reasons. We've had very positive rains. There was a lot of bumper harvest. But in the second to last quarter, we see a lot of the financials bringing in more interest, and one or two in the agricultural sector, you have a key interest. But generally as a market, because there's also the issue of demutualization, which will make Nairobi Stock Exchange much more independent and be able to trade on its own, which is also a positive aspect. So yes, I'm looking at us hitting the 5,000 mark before the end of the year, and most likely maybe the 5,400 or 5,500 as we go to close the year. That's my outlook.